is because when we started this particular series, there were 50 days left. Now the days are continuously decreasing, so it means we have to be more cautious about our preparation. Like, we have a very less time period to prepare, and we have 4 subjects, or each and every subject have 4 modules, so we have to be very much prepared for all of these. So now let's start the session. But before starting the session, I'm your mentor Amanjot Kaur for Indian Economy, Indian Financial System and BPP, and these sessions are going on Monday to Friday in morning 7 a.m. for PPB and 7:30 a.m. for Indian Economy, Indian Financial System. So do join these sessions. Only on offices that are 24/7. Now let's start the session. And as you know, in each and every session, I come up with a particular topic of yours, and in that topic, I will discuss the certain number of questions with the explanation of the topic. So what topic we are going to discuss today? We are going to discuss the chapter number 14 today, and simply we know that Indian Economy, Indian Financial System have the four modules. Out of that, first module covers only 11 units. Total we have a 45 units. Out of that, the first unit only covers your 11 units that we have completed. 12th and 13th unit we have already completed, and today we are going to discuss the 14th unit, that is money supply inflation. So before coming up to the questions, practicing questions, let's start and understand the topic, and then we will move forward to the questions. So first of all, what is money supply? So for money supply, RBI is the central bank of our country, and RBI need a certain, what we can call it, RBI need a, okay. So RBI is the central bank of our economy, RBI is the central bank of our country, and RBI needs to measure the liquidity in the market. RBI needs what? To measure the liquidity in the market. So RBI have to measure the money supply. RBI have to measure the money supply in the economy. And when RBI measure this money supply in the economy, this will be done by RBI with M1, M2, M3, M4 and M0. Out of that, M1 is known as narrow money, M3 is known as broad money. They are very famous, they are broad money and narrow money, and they are very famous. In contextual, maximum number of questions will be asked from these two. Now it's very obvious, like RBI is the central bank of our country. It's the responsibility of the RBI to manage the liquidity in the market. Liquidity means the cash flow in the market. And how RBI will be managing this cash flow? With the help of monetary policy. So we know that RBI makes monetary policy. RBI makes what? RBI makes the monetary policy. So this is the responsibility of RBI to manage the money supply. Let's say in the economy, the money supply is increasing. If the money supply increases, the demand of goods and services by the consumer increase. If we have more money, we will purchase more goods and services. If the demand increases, the supply will decrease, because the demand and supply will always have an inverse relationship. They always have an inverse relationship. So if the demand is increasing, supply will definitely be decreased. Okay. Now after that, the prices will start increasing, and the money value of goods and services will be decreasing. And that creates inflation in the country. That creates what? That creates inflation in the country. Okay. Now, if money supply is reducing, then people will demand less goods and services, and then the supply will be more in comparison to demand, and then the prices will reduce, money value will increase, and this will create deflation in the economy. So you can see, if the money supply is more than required, then it creates inflation in the country. If money supply is less than which is required, it will create deflation in the country. So to make economy capable of being stable, we have to stable the money supply. And to stable the money supply, RBI makes monetary policy. RBI makes monetary policy, and the objective of monetary policy is what? To have a price stability. To maintain price stability is one of the objective of monetary policy in our country. That's what RBI is doing. But to maintain the price stability in the country, RBI have to know like how much money is there in the economy. And how RBI will know how much money is there in the economy? With the help of these measures of money. So with the help of M1, M2, M3, M4, M0, RBI will know what amount of money is available in the economy. Accordingly, RBI will make the monetary policy to maintain the price stability in the country. So they all are related to each other. Now, what is inflation? This is what we have discussed about the condition, measures of money, and what is what is the reason behind which RBI have to maintain this measures of money, right? Now let's talk about a little bit about inflation. So what actually the inflation is? Inflation, if I am talking about, let's take a question here, like what is inflation? This is the question for all of you. What is inflation? Okay. Now I have first option, increase in money supply is inflation. I have second option, increase in demand is inflation. I have third option, increase in prices is inflation. I have fourth option, that is reduce in the money value is inflation. And I have fifth option, that is all of the above. So which of the following option you will give that this is the right answer for this question? What is inflation question is asking, and these are the option in front of you. So let me know which of the following according to you is correct about the inflation. So can I say that inflation is simply rise in the money value of goods and services? Can I say inflation is the increase in the money supply? Inflation is the increase in the demanded? Can we say that? Let's understand this. So if I talk about our country, I have never heard this statement from any person that Mr. Ambani have more income now, that's why there is inflation in the country. I never heard someone saying that the demand of crude oil from the India is increased, that's why we have an inflation. I always heard people talking about like the petrol we used to purchase at 70 rupees per liter, now the petrol is 140 rupees per liter. It means the price has been just doubled. So I always heard people talk about in context of the price, and that's what the inflation is. So whenever the prices of goods and services are rising, that will create your inflation. So the right answer is prices increase. Increase in the prices of goods and services is what it's an inflation. Okay. Now what happened, what happened if we're talking about inflation here? So what happens here? First of all, let's see what conditions are there. So economic conditions will be like whenever we talk about the increase in the prices of goods and services, the first of all money supply will increase. So whenever the money supply increases, what happens? Whenever the money supply increases, the demand of consumer will increase. Whenever the demand of consumer increases, the supply will decrease, because the demand and supply have an inverse relation, negative relation or opposite relation. So demand increases, supply will decrease, so prices will start increasing, because people are asking for more goods and you do not have a goods, so prices will what? Increase. In that situation, the purchasing power of money will be decreased. Purchasing power of money, or you can call it a money value also. The money value will decrease. Why money value is decreasing? The reason behind is because the prices are increasing. Let's say I used to have 200 rupees. I used to purchase 2 products in 200 rupees. This 2 pen I used to purchase in 200 rupees. Now what happened? The prices increase. Now this 1 pen will be available in the market for 200 rupees. So I used to purchase 2 commodity. Now I am purchasing 1. It means the 200 rupee note which I have now, it has a less capacity to purchase goods and services comparatively that I used to have. It means the purchasing value of 200 rupee note has been decreased. The reason behind, because the prices increases. So whenever there is an inflation, the money value of the currency will definitely be decreased. Okay, so all these terms are related to inflation, but they are not inflation. Inflation means rise in the prices of goods and services. Why prices are rising? Because there is a more demand. Why there is more demand? Because people have more money supply. And after increasing prices, what impact will be seen? The money value will be decreased. So this is what we are talking about inflation. Okay, so I hope till now everything is clear to all of you. Now we will be starting practicing the question, and in the end of the session I will be asking you all that how many answers you have given correct here. Okay, so do count how many answers you are giving correct. So first question here is that which of the following statement true about inflation? The statement which is true about inflation, and we have these 4 options in front of you. That is, first thing, a rise in the general level of prices leads to fall in the purchasing power. Both A and B, none of the above. So what do you think, which of the following is correct? First is prices are rising. Second is purchasing power leads to decrease. Third is both A and B. Fourth is none of the above. What do you think, which of the following is correct? So right answer will be both A and B, because it's very obvious the general level of prices will increase due to the inflation. It leads to fall in purchasing power. Is it true? Yes, it's true. Why it's true? Inflation do leads to a decrease in the purchasing power of people as well as money. Because let's say money supply increased, the demand increased, but the supply decreased, because of which the prices are keep rising. This is what inflation is. When the prices are rising, it means the cost of living will also rise. Cost of living means simply means the money you have to spend to survive. That's the cost of living. It will increase. And when the cost of living increases, you somehow have to decrease your spending, and that will promote the lead to fall in the purchasing power. And similarly, the money value reduces because the money will be able to purchase less goods and services comparatively earlier. So the purchasing power of people and the purchasing power of money both will decrease. So right answer will be C option, sorry. Okay, right answer is C. Second question we are talking about here, the demand deposit of banks are included in. So if we talk about bank have a certain assets. Every business have assets and every business have liabilities, right? So if I talk about the asset of a bank, the asset of a bank is the loans and advances which bank provide to its customers. Okay, and what is liability? Liability means simply public deposit. Liability means public deposit, that's the liability. Okay, and these deposit are of two types. That is demand deposit, the type of deposit which will be dependent on the customer demand, and the second one is the time and term deposit. So the demand deposit covers CASA, current account, savings account. Time deposit covers RAFA, recurring account, and fixed account. So demand deposits are those deposits which can be deposited as per the demand of the customer, withdrawal as per the demand of the customer. Time deposit or term deposit are, on the other hand, the types of deposit which will be there for a particular period of time. Okay, so now this is what the deposit we are talking about, and this is what the demand deposit is. Demand deposit means CASA, and the question is asking which of the following includes the demand deposit. So we have options M1, M2, M3. And to answer such kind of question, you should know what is M1, what is M2, and what is M3. Okay, so here let's understand this. If I am talking about M1, M1 is equals to currency unit plus demand deposit plus deposit with RBI. This is what your M1 is. M2 we have M1 plus post office savings. PO savings means post office savings. M3 we have M1 plus time deposit. I will explain all these, don't worry about it. And the M4 we have M3 plus post office savings, but excluding national savings certificate, right? So what is M1? M1 is saying CU plus GD plus deposit with RBI. Currency unit, CU means currency unit, currency unit means whatever notes and coins public have. DD means demand deposit, whatever CASA public bank accounts have. Then we have deposit with RBI, where whatever reserves or deposit RBI maintains. This is the M1. M2 means M1 will be there, CU plus DD plus deposit with RBI will be there, plus you will have a post office savings. In the post office, you have FD, you have RD, you have MIS, etc. All these will be covered. Then M3 will be M1 plus term deposit. Term deposit means your RAFA. M4 will be M3 plus your post office saving, but the national saving certificate amount you have to be excluded. So here the question was asking which of the following includes the demand deposit. So M1 includes demand deposit, M2 includes demand deposit, M3 includes demand deposit, and M4 includes demand deposit. Because in M2 we have M1 have demand deposit, in M2 we have M1, in M3 we have M1, in M4 we have M3. So all these measures of money will include the demand deposits of the bank. It means the right answer here will be all. M1, M2, M3 all will be having the demand deposit. So the right answer will be your D option. Okay. Next question. Under money supply concept, the term broad money include which of the following? So broad money, I have told you which of the following is broad money. M3 is a broad money, and I have told you the formula of broad money. So let me know which of the following will be the right. Which of the following statement will be right? Let me know that. A, B, C or D? Okay. So if I talk about this particular question, the question is talking about what is M3. And you can see M3 will include the term deposit. The first one have deposit and public deposit. It do not include term deposit. Then we have currency with public demand deposit, other deposit with RBI. It also do not have term deposit. Fourth one is saying currency with public plus bank deposit plus post office deposit, but it do not include time deposit. Here is the time deposit with bank, the demand deposit of a bank and the currency with public. So right answer will be your C option. Okay, right answer will be C option, which will cover the time deposit. It means RAFA will be covered under the M3 and broad money means M3 only. Okay, next, the most important money supply indicator monitored by RBI is dash. So we have measures of money M1, M2, M3, M4. So out of these four, which of the following is the important money supply indicator for the Reserve Bank of India that RBI calculates? Let me know which of the following is true. A, B, C or D. So I think it is very easy to answer. RBI measures this money supply because of the reason, Hana, because of the reason RBI wants to know how much money is there in the economy. Hana, RBI wants to know how much money is in the economy. That's why RBI is calculating this. Right. And RBI will want to know how much money supply in the economy, and the money supply in the economy that will be defining every liquidity to the RBI. That's a broad money. So right answer is C, because it will cover deposit with, it will cover currency unit, the money with public, it will cover demand deposit, the money with commercial banks and all with the in the CASA, then the term deposit, then the deposit with RBI. Every type of money which is available in the economy will be calculated by the M3, and that's why it is the important money supply indicator that RBI calculates. So right answer will be your C. Next question. Demand deposit with a bank include all liabilities which are payable on demand, and they include dash. The demand deposit is what? With a bank include all the liabilities. It do what? It include all the liabilities which are payable on the demand. So they will include what? Options are these. Out of that, let me know which will be included here. So demand deposit with a bank include all the types of liability which are payable on demand. It will include. So demand deposit itself represents that the deposit you have given to the money that will be run on as per your demand. If you want to withdraw it, you will withdraw it. If you want to maintain it, you can maintain it. There is no such kind of restriction. Okay. Now, which of the following is right? The current deposit, demand deposit portion of savings account. This is correct. Margins held against letter of credit and guarantee will be covered. The balance in overdue fixed deposit, cash certificate, cumulative recurring deposits, all these will be covered under the demand deposit with the bank liability we are talking about. So all answer will be your D option. 1, 2, 3, all the statement were true. Next. Which of the following measures of controlling inflation? One second. Which of the following controlling measures of inflation can be taken by Reserve Bank of India and not by government? So we know inflation is a rise in the prices of goods and services, and that can harm the economy. If the prices are increasing above a certain level, it will create a loss for the economy. So inflation is good for the economy, but a limited inflation is good for the economy. So that's why if inflation is rising, this is the responsibility of the RBI to control that. So that's what we're talking about. RBI have a certain measure that is known as a monetary measure which controls the inflation. Government of India takes the fiscal measures to control the inflation. Similarly, we have foreign trade measures. It helps in the controlling the inflation. Apart from that, we have other measures in which production will be controlled so that inflation will be controlled. So out of these, you have to tell which of the following the controlling method used by RBI. Which of the following controlling method should be used by RBI? Okay. So the right answer here will be, first is saying introduction of progressive, one second. Introduction of progressive tax system. This is in the hands of the government of India, not RBI. Control over public expenditure, again done by the government. Then profits of the public sector is in the hands of the government. So these three measures will be taken by the government of India in the fiscal policy, but the rationing of credit will be done by Reserve Bank of India, in which RBI tells in which particular sector how much loan you can provide or how much loan you cannot provide. What down payment you have to take, what down payment you are allowed to take in case of what type of loan, also how many installments you can make in a case of loan. All this will be done by RBI, that is known as your rationing of credit. So right answer will be C option. This is the measure that RBI takes. Which are the following below indexes associated with the given statement? Like, it is an index that tracks the change in the retail prices of essential goods and services consumed by the households. So whatever goods and services we are consuming, that prices will be calculated on the retail level. And which of the following index calculates that? This is the question. Is it a CPI, is it a WPI, is it a PPI, is it a CPI for agriculture? So it can't be WPI because it measures the inflation in the wholesale market. It can't be producer price index because it takes the inflation at the production stage. Okay, so we have two options, consumer price index and here the CPI also. So this is what we know, that WPI measures the inflation at the wholesale level and CPI measures the inflation at the retail level, that we know, right? So in this situation, A and D can be right. Out of these two can be right. Now we are talking about essential goods and services consumed by the household. Here you are talking about CPI for agriculture labor. So right answer will be what? It will be B. Sorry, not B, this A, consumer price index. Okay, so CPI measures the inflation at the retail level and CPI also maintain the record of what? It also maintains the record related to your retail level plus the cost of living of the public. So right answer is A. Next, if the public finds ways of making the same amount of money perform a larger amount of transaction than before, then dash. So what we are talking about, if the public finds ways of making the same amount of money perform a larger amount of transaction. Let's say I used to purchase 200, I used to give 200 rupees and used to purchase 2 pen. Now I am giving 200 rupee, but I am purchasing 4 pen. It means the same amount of money which I have, it performing the larger amount of transaction. Okay, it is performing the larger amount of transaction. This is what the question is asking about. This situation be known as what? And these are the options in front of which of the following will be right? The demand for money must have risen, velocity of money have risen, incomes and prices must have risen, the supply of money must have risen. So which of the following is right? Which of the following is right? So it's very obvious, the demand for money have not risen. The income and prices must have not risen. The supply of money must not have risen. The velocity of money have been risen. It means that the purchasing power of money increased. That's why in the 200 rupee you are able to purchase 4 products. So when the money supply, money value of the currency increases, that's the velocity must have risen of the money. So right answer will be your B option. Right is B option. Okay, because you are paying the same amount of money, but it is performing a greater transaction. Now narrow money consists of, narrow money means M1. So these are the options in front of you. Out of this, M1 includes CU plus DD plus deposit with RBI, and you can see currency with public is CU plus the demand deposit plus the deposit with RBI. So this is your right answer. M1 will be your A option. Okay. Now, money supply refers to. So, a lot of time we talk about the money supply. We have just talked about these M1, M2, M3 are the measures of money supply. So, what money supply actually means? It's a liquidity that is available in the economy. But how to define this? First option is saying the amount of money in banks. Second is saying the amount of money with the public, the amount of money in circulation in an economy. So which of the following will be right answer? Obviously C. Whatever money will be available in the economy, whatever liquidity will be available in the economy, that is known as your money supply. So right answer is C option. Clear? So this is how we have discussed your chapter number 14, but this is not sufficient because the syllabus is vast. You have to cover the syllabus in the detailed manner. So how to enroll, how to know about that? First of all, you have to go to the Mahapack 2.0 to cover the complete detailed syllabus. And right now, the best option is available for you because the Mahapack validity has been enhanced according to your availability. So to enroll, just go to the Adda 24/7 application. But before that, let me know in the comment section how many answers you have given correct. Okay. And then go to the JAIIB CIB section here. Go to the JAIIB October 2023. You will find all the batches here. So when you find all the batches here, this is the Sankalp JAIIB 4th batch and this is the Mahapack. So click on the batch, whatever you want to enroll. Do check the offering. Good morning everyone, welcome to the Officers Adda 24/7 YouTube channel. As you all know that this time 7:30 AM is reserved for the Indian economy and Indian financial system daily session that is going to happen from Monday to Friday for your JAIIB October paper. So we used to have a Sankalp series in which in every session we were discussing 10 questions regarding your particular topic, and we have converted the same series in the 50 days 50 series in which we are discussing more questions comparatively in the Sankalp series we used to have, in which again I will be following the same rule, or I will be following the same pattern in which I will take one particular topic and discuss the certain number of questions on that. Okay, so let's start the session. But before starting the session, those who have already joined us here, a very welcome to the channel and a very good morning to all of you. Also, I want to all of you to share the session on the WhatsApp, Telegram and Facebook groups wherever you know the persons are available, the bankers are available who are going to give their JAIIB exam. And apart from that, one more information. We have now only 48 days left. I will be counting days with you every day. That these days, how much days are remaining, so that you will be very serious and prepare for your paper very well. Okay. So before starting the session, I am your mentor Amanjot Kaur for Indian economy, Indian financial system and principles and practices of banking. And in today's session, I have come up with the module B of Indian economy, Indian financial system, in which we are going to discuss the chapter number 12, that is fundamentals of economics, microeconomics, macroeconomics and the types of economies. Clear? So as we know, there are 45 units in Indian economy, Indian financial system. Out of that, 11 units were in the module A, and we have completed the module A on YouTube with the form of MCQ with explanation. Now, in this particular class, we are starting the module B with the 12th unit, or we can say the chapter number 12, or the first chapter of your module B, that is fundamentals of economics, macroeconomics and the types of economics. So let's start session. Before going forward to the questions, first let's understand about the little bit about the topic, and then we will continue with the questions. So what is economics? Economics is a term that you all have heard as a subject. You always heard economics as a subject. It means if it's a subject, you are reading something, now you are studying something in this particular subject. So what you are studying economy. So the study of economy is economics. When you study economy, that is known as economics, right? Now, what is economy then? So economy simply is a system in which production, distribution, consumption of goods and services will be done. And this system will be studied, and that will be known as economics. Now, what is the need of studying the production, distribution, consumption of goods and services? In every economy, there is a scarcity of resources. There is a resources which are limited, and unlimited needs and wants are there. So we have to find out such a way by which we will use the scarce resources, limited resources, to fulfill the unlimited needs and wants. This is what we need. This is what we have to do. And this is where the need to study economy, or the need to study the system where production, distribution and consumption of goods and services are done, is required. Okay, so we are studying how to fulfill this demand, unlimited demand with the limited resources. So simply managing the resources, doing the certain allocation of the resources, distribute the resources in such a way you will be able to fulfill the need of the population. That is the study of economy, that is known as economics. Now, from where this term has been taken from? So this term has been taken from a Greek word, that is oikonomikos. And oikonomikos means management of households. Like if I talk about my household, if I talk about your household, so we all have seen in our homes that we are doing the same thing. We have unlimited needs and wants, but we have a limited resources. So every month, every year, we have to balance these two things. We have to balance the resources and the needs of ours, so that we will be able to fulfill the need, as well as we will be able to save some amount of money for the future risk on uncertainty. So every time we have to prioritize. Let's say I have 10 needs, but I have only 5 resources. So out of the 10 needs, I have to prioritize which particular 5 resources, which particular 5 needs have to be fulfilled now. So I will be fulfilling that, so that my needs will be fulfilled at that particular time. So this is how you are managing your household, fulfilling your needs by using your resources and making it much more capable that you are satisfied by using the resources. The same thing when you are implementing on the economy, that is known as management of your nation. And this is what the economics is. So the economics term has been taken from a Greek word that is known as oikonomikos, which means management of household. Similarly, when you're managing your economy, that is known as economics. Okay, so let's start. Acha, apart from that, this economics has been divided into 2 branches, that is micro and macro. So Mr. Ragnar Fritsch in 1933 divided economics into 2 branches, that is microeconomics and macroeconomics. Now microeconomics is a type of study in which you are studying the individual. So when you study at the individual level, that is known as microeconomics. You are studying individual person, you are studying individual entity, individual business, that is known as microeconomics. Macroeconomics means a study of economy as a whole. You are doing a study of economy as a whole. You are doing aggregate study, that is known as macroeconomics. Clear? So these are the 2 branches of economics. At microeconomics, we are going to study individual level. At macroeconomics, we are going to study at the level of whole economy. Okay. Now types of economies has been divided on the 2 basis of 2 categories. First is with the trade or with the relation from outside the country. It means the relation from rest of the world. On the basis of that, we have 2 types of economics, open and closed economy. Open economy is such an economy where export import is allowed. It means no restrictions has been put by Government of India on the economy. In the open economy, there is no restrictions on the foreign trade. Whatever you want to export or import, you can do that. Obviously, not the prohibited item, but yes, there is no restriction of performing the foreign trade. You can perform export, import in the country. That's the open economy, which India is. And India became open economy in the 1991 when the globalization was introduced. And we have discussed that so many times. Now, if I talk about closed economy is the economy where there is a restriction from the side of the government on the export and import, or I can say on the foreign trade of a country. That is your closed economy. Moving forward, and if I talk about the economic system, there are 3 economic systems: capitalistic, socialistic and mixed. Capitalistic economic system is the economic system in which private industrialists are deciding what to do and what not to do. The economy which is run by private sector, that is known as capitalistic economy. They are working for the profit maximization. Second, socialistic economy. Socialistic economy is the economy in which the government is running the economy and government is working for the social welfare of the society. And the third one is mixed economy, and mixed economy is the economy where the capitalistic, socialistic both working together. That's a capitalistic economy. Now, when I say that in the capitalistic economy, private industrialists will run the economy, it doesn't mean that the private industrialists are going to make the law and order of our country. No, it means the 3 major economic problems of the country: what to produce, how to produce, for whom to produce. The answer of these 3 major economic problems will be, or the decision about these problems will be taken by the private industries. That's a capitalistic economy. If these 3 decisions taken by government, then it's a socialistic, and both are taking the decision, that's a mixed economy. So this was the overall concept of the chapter number 12. So let's start the discussion of the MCQ with the explanation. Okay, now you have to answer. I have explained so many things in the last 7 to 8 minutes. So I want each and everyone to participate in the session and answer the question, because that's a very simple unit. Okay, let's start. First is saying, in broad terms, the difference between microeconomics and macroeconomics is that. So what is the difference between micro and macroeconomics? That you have to answer, and you have these 4 options in front of you, in which the first one is talking about that they use different sets of tools and ideas. Okay. Second is saying microeconomics study decision of individual people form, and macroeconomics study the entire national economy. Third is saying macroeconomics study the effect of government regulation and taxes on the price of individual goods and services, where microeconomics does not. Next, microeconomics study the effect of government taxes on the national employment rate. Clear? So these are the 4 statements we have. Out of that, you have to tell which statement talks about the difference between micro and macro. So you can say microeconomics study the effect of government taxes? No. Macroeconomics study effect of the government regulation and taxes? No. Micro and macro is the study of economy in which you are doing at the individual level or the whole level. They use different set of tools. Right answer is B. One second. Right answer is B. Microeconomics study economy as an individual level, individual people, individual firm. Where the macroeconomics study the entire national economy. It means very obvious, very simple. Right answer is B option. Okay, next question. Next we have read the following statement carefully and choose the which statement incorrect ones in relation to the concept of mixed economy. So we have these options. 5 statements are there. Out of that, you have to tell which of the following is incorrect one in relation to the mixed economy. So mixed economy is also known as dual economy, and you have to answer which of the following is correct. Okay. So first is thing, all societies are mixed economies with element of both market and socialistic. There has never been 100% market economy, although 19th century England came close. Third, today most decisions in United States made by the government. Okay. Fourth, but the government plays an important role in overseeing the functioning of the market. Government passes laws and regulates economic life, produce goods and services, and control the pollution. Okay. Fifth, for most societies, nation today operate as mixed economies. India, right from the beginning of 1991 reforms, has been a mixed economy where public sector, private sector, and the joint sector coexist and complement each other. So out of these 5 statements, what do you think which of the following is the incorrect one? The incorrect one we are asking about. Okay, so the right answer here will be so. If I talk about the first one, mixed economy with the element of both market. Acha. Socialistic economy is also known as a command economy or a planned economy. Capitalistic economy is also known as a market economy or the laissez-faire economy. So the market economy means capitalistic. So when there is a capitalistic economy plus a socialistic economy, that's a mixed economy. This is true. First is true. Second is also true. There has never been a 100% market economy. Third is saying, it means first and second is true. We have to find out incorrect option. It means it cannot be the B option. It cannot be the C option because first and second are true. And you have to find incorrect. So it can be A or D. Now, third is saying today most decisions in the US are made by the government. If government is making decision, it means USA is a socialistic economy. Do you think USA is a socialistic economy? No. China is a socialistic economy. India is a mixed economy, but US is a capitalistic economy. That's incorrect. It means third option is incorrect. Third statement is incorrect, sorry. Fourth is saying, but the government plays important role. Obviously, now, if the capitalistic economy is there, it's not like the private companies will decide the law and order. The law and order will be decided by the government. The production will be done by the government. The pollution will be controlled by the government. The social welfare will be done by the government. This is also true. Next, most societies nation today operate as the mixed economies. Okay. India from right beginning of 1991 reform. No such kind of point has been seen in the economic reform situation in the 1991. So the right answer is third and fifth option, or the statement, sorry, is incorrect. So the right answer will be A option. Right answer will be A option. Okay. Next question. Macroeconomics is a study of economics that deals with the 4 major factors. So macroeconomics, you know, it talks about the economy as a whole. So it deals with the 4 major factors, and the options in front of you are these. Household, firm, government, demand and supply. Household, firm, government, external sector. firm, government, free market, regulation, or none of the above. So what do you think? Which of the following are the 4 factors that deals or that study the macroeconomics? So before answering this question, I want to let you know all that when you are talking about macroeconomics is the study of economy as a whole. When you are studying economy as a whole, it means very obvious you will be counting the macroeconomics data here. And when you are counting macroeconomics data, one of the macroeconomics data is GDP. Because it's very obvious now, you are not calculating GDP of individual person, you are calculating GDP of a country. So that's a macroeconomics factor. So what is GDP? GDP simply means the money value of all final goods and services produced within the geographical boundary of a country in a financial year. Whether it is produced by Indian or it is produced by foreigner doesn't matter. But the production should be done within the geographical boundary of a country. So GDP stands for gross domestic product. Definition is money value of all final goods and services produced within the geographical boundary of a country during a financial year. Okay, that's a GDP. And how to calculate GDP? We have a formula C plus I plus G plus NX. This is the formula how you can calculate the GDP. If you want economic growth means increase in the production. If the production increases, the GDP increase. If the GDP increase, economic growth will increase. It means macroeconomics will grow. So here the C stands for consumption. Consumptions by household. Consumption by whom? Households. Okay. Then I stands for investment, and that investment is by the private or we can say private firms. So private investment is denoted as a I. And G stands for government expenditure here. And the NX stands for net exports. And how to calculate net export? Exports means selling goods from India to abroad. Selling goods to abroad is the exports. And how to calculate net value? Net means remained value of exports is what? So what you have to do, exports minus imports will give you the value, how much net exports value is there in the country. So this is how you calculate the macroeconomics data, GDP. Okay, so consumption done by households of the country, investment by the private firms, third, expenditure by the government, and fourth, net export. Net exports you can represent as which of the following option? First is saying households, that can be represented by C, firms can be represented by I, government can be represented by G, but demand and supply cannot be represented as a net exports. Third, firm again I, G, free market regulation cannot be defined under the GDP. Here households means the consumption that households do. Private firms investment will be counted, government expenditure will be counted, and external sector means net exports. So when you calculate all the value of these 4 factors, it gives you the study of economics. And these are the 4 factors. Okay, factors are households, firm, government, and external sector. These are the 4 factors we have. Clear? So the right answer will be your B option. I hope it's clear to all of you. So that's very simple. If you know the definition of GDP, if you know the macroeconomic factors, you will be easily able to answer the question. Now, no contemporary society, nation falls completely into either of these polar extreme categories. Rather, all societies are dash economies. So what do you think? What is the societies are? Mixed, capitalistic, socialistic, or market. So you can see capitalistic and market economy is the same. So it can't be B, it can't be D. It can be socialistic, it can be mixed. So the all economy cannot be the socialistic now, but all societies are what? Mixed economies. So that's why the right answer will be your A option. Clear? Next question. Next we have here microeconomics concerned with the behavior of dash. So microeconomics means a study of economy as an individual. So we have 4 options. First, GDP, individual entity, economy as a whole, or none of the above. As I have given you already the understanding of the topic, micro and macroeconomics. So economy as a whole is a study of whole economy. That's a macroeconomics. GDP, I have just told you it's a factor of macroeconomics. So, but when you are studying individual level, that's a microeconomics. Microeconomics means a study of individual. Whether an individual person, entity, business, everything can be counted, but at the individual level. So, right answer is B. Next. Now, the definitions. One thing I forgot to tell you, the definitions are very important. Okay, the definitions are very important in the paper. Why it is important? Because there are mainly 4 economics in the economy. Hana, the 4 economics are there and they have given the 4 definitions. Out of that, one is Mr. Adam Smith, Mr. Alfred Marshall, Mr. Leon Robbins, and the 4th one I will be writing here, that is Mr. Paul Samuelson. Mr. Paul Samuelson, and he has given the definition of economics. That's a growth definition. That's what? That's a one second. That's a growth definition. Okay. So that's what? That's a growth definition. Okay, that's a growth definition given by Mr. Paul Samuelson. Now you have to answer me here that out of the 3 options that has been given in front of you, which of the following is the correct combination, which of the following is the correct match? Like we have welfare definition, scarcity definition, wealth definition. So Mr. Adam Smith, Mr. Alfred Marshall, Mr. Robbins and Mr. Paul Samuelson, they have given us the wealth definition, welfare definition, scarcity definition and growth definition respectively. I have given the number of economics in the same sequence as I have given the definitions given by them. So you can see welfare definition given by Mr. Alfred Marshall, scarcity definition given by Mr. Robbins, and wealth definition given by Mr. Alfred Marshall, and the growth definition given by Mr. Paul Samuelson. So this is very important. So the first one have a option number B. It can't be true. It can be true. It can be true. It can't be true. Okay. Second is saying second is C, second is A, and second is C. Okay. So it means this is the right answer. And the third one is A. So right answer will be C option. The correct answer is C. So do remember their definition, because this can be asked in a multiple way. They can ask in the maths the following one-liner or statement-based question. So that have to be remembered by all of you. Clear? Next. Next question is talking about the definition of Robbins can be analyzed as follows. The definition of Robbins can be analyzed as follows. So I have told you Mr. Robbins has given a scarcity definition. Mr. Robbins has given what? The scarcity definition. And the scarcity definition can be defined how? Can be analyzed how? First is saying man has unlimited wants and needs. Second is saying the means to satisfy the wants are limited. Third is saying means or resources are not limited but also have alternative uses. Fourth is saying man has to make a choice how to make use of limited resources to satisfy his unlimited wants. So you have to tell the scarcity definition of Mr. Robbins is analyzed by which of the following statements? A, B, C or D. So man has unlimited wants and needs, that's not sufficient. Means to satisfy the wants are limited, that's also not sufficient. Then means or resources are not only limited but also have alternative uses. Okay. So if you are saying that resources are limited, needs are unlimited, that's not the definition of economics you are defining. You know this is the problem of economy and you have to provide such kind of definition which gives the solution to that. So if there is a limited resources, there is a unlimited needs and wants, you have to define that what you have to do. You have to have alternative uses. So right answer will be C. The maximum utilization of minimum resources is what you have to do. So the right answer will be C option. Okay, next question. A market economy is one. So I have told you market economy is also known as a capitalistic economy or laissez-faire economy. So capitalistic economy or laissez-faire economy or a market economy, they work on the market forces. What are the market forces? Demand and supply. There is a freedom that will be run by the private sector. So this will be the right answer. Because if there is a government, it will be a socialistic. And other names of socialistic economy is planned economy and the another one is command economy. These are the 3 names. Acha. One second. I will write like this: command economy. Okay, so these are the 3 names of socialistic economy, or the 2 other names of socialistic economy. Market economy is also known as capitalistic, or you can call it laissez-faire economy. Okay, and the mixed economy is known as a dual economy. Mixed economy have another name as a dual economy. So these are the other names, and the right answer will be A option, because market means capitalistic means private industries are running the economy. Next, laissez-faire economics means, I have just told you laissez-faire economics means is the capitalistic or market economy which works on the market forces, and market forces are demand and supply. So you have to answer which of the following is correct about the laissez-faire economics: A, B, C or D. So a term denoting economic transaction carried out by the state government. Economic transaction in private parties where there is no intervention by the state government, a branch of socialism focusing on welfare. None of the above. It's a laissez-faire economy, it's a capitalistic economy, private industrialists will be there. There is no role of socialism. There is no role of a state government. Achha, 1 second. No intervention, it is written. 1 second. It is talking about no intervention of government. That's true. A term economic transaction carried out by the state or government, that's a socialistic economy. So right answer will be B. Economic transaction run by the private parties and there is no intervention. No intervention will be done by the government. That's the right answer. So the right answer will be your B option. That's the laissez-faire economy's definition. Okay, next question. Next we have economics is the science which studies human behavior. 1 second. Which studies human behavior as the relationship between ends and square means, which have alternative uses. So this definition presents economics as a study of means and ends. Which of the following is true regarding this definition? So definition have been given to you that economics has what? Human behavior study have been done, and it is saying there is a relationship between the ends and scarce means, which have alternative uses. You can have multiple uses of the single resource, the single means. Okay, so this definition presents economics is as a study of means and ends. So you have to tell which of the following is correct. Man has unlimited want and the means to satisfy human wants are limited. This is what the option is saying, means and scarce, or ends and scarce. Resources are not only limited but also have what? Alternative uses. This is also true. Man has to make a choice. This is also true. You have to find out the alternative use now. So right answer is D option. This is what the definition in the question is defining, that these are the things in the economics is there. So right answer will be D option. The right answer is D option. So this is how we have discussed the chapter number 12 of module B. So do not forget to let me know in the comment section right now how many answers you have given correct. If you are watching recorded videos, do let me know in the comment section how many answers you have given correct. Now it's very obvious, the discussion of certain questions is not the completion of the whole chapter. So what you can do, you can go and check the Mahapack 2.0 that have offer right now also, that will be providing you double validity with the 81% discount. Okay, so first of all, do download the application, go to the JAIIB CIB section, go to the JAIIB October 2023, and you can find here Mahapack 2.0 and batch is available. So if you want to go with the individual batch, that's the batch. Latest batch is started from the 7th of August, or you can go with the JAIIB Mahapack 2.0. Click here and do check the offerings here, what will be provided to you: marathon, live classes, topic wise test, full length test, e-books, e-videos, everything available. Then the validity 6 plus 6 or 12 plus 12, whatever you want. 6 plus 6 is sufficient because that's only for JAIIB. If you purchase a combo JAIIB CIB Mahapack, then go for the 12 plus 12 month. Then click on the buy now. As you can see, the code is written here, AUG80. Apply that code. Do not apply 75 because it will provide 75% discount. 80 will provide you 80% discount. But I have told you that the double validity with the 81% discount is available. So double. Good morning, everyone. Welcome to the official YouTube channel of Office Society 24/7. So, how are you all? Let me know. And also, those candidates who have already joined us here, I want all of you to share this session on the Telegram channel and WhatsApp group, as well as your Facebook group, wherever you know the bankers are available who are preparing for the same JIB October paper. One more thing, I have informed you a lot of time. Once more, I am informing all of you that the JIB registration date for October has been extended from 21st of August to the 27th of August. So, if you haven't enrolled yet, do make sure you enroll yourself as soon as possible, because this is the last option you can enroll for the October paper. After that, I don't think, or there is no chances that the IIB will extend it more. So do make sure you register yourself. This has been done only because there was certain issue with the DBF form. They were the persons were not able to fill the DBF form. Okay, so do make sure you fill this form as soon as possible. Okay, so let's start. As you know, Monday to Friday we are meeting for the IFS session at 7:30 a.m. and PPB at the 7 a.m. only on offices at 24/7. So this is the session regarding your IFS. So first of all, I am your mentor Amanjot Kaur for IFS and PPB, and in this particular session we are going to discuss the chapter number 15 of your IFS. So as you know, every day we are discussing a particular chapter from your subject, whether it is IFS, whether it is PPB. So you can see here module B we are talking about, in which simply module B, till now if we talk about, we have discussed that the IFS have 45 units. Out of that 45 units, 11 units we have completed. It means we have completed module A. We started module B, 12, 13 and 14th we have completed. Today we are going to cover the 15th chapter, that's the theory of interest. And I don't want any one of you to give a kind of demotivation or something. I do not want to demotivate you, but this is a kind of chapter which needs a proper attention. This is a chapter which needs a proper conceptual understanding, and this is a very important chapter. Around 3 to 4 questions definitely will be seen from this particular chapter, because it includes numericals, it includes ISLM curve, it includes the theories, classical theory, Keynes theory, everything is there. So do make sure you be very prepared for this particular chapter. So it's not possible in half hour to cover the whole theory, but yes, a limited I want to tell you all. As you can see here, that if I talk about the types of income, there are 4 types of income. As we know, there are factors of production, that is land, labor, capital, entrepreneurship. So these factors of production are providing us 4 types of income, that is land provides rent, labor provide wages, capital provide interest, and entrepreneurship provide the profit. So these are the 4 types of income. Now, out of these 4 types, in the theory of interest, obviously we are going to talk about theories. So theories have 3 elements, interest have 3 elements from which you can decide what interest you want to charge. The first element is risk involved. Whenever a bank providing loan to a customer, or anyone is providing loan to the customer or any other person, first they have to analyze the risk. They have to do what? They have to analyze the risk, that what actual risk is there at the time when you are providing loan to someone. The second, we have trouble involved. When you are providing a loan, what kind of trouble involved in that category, in that particular thing, that have to be counted here. That is the trouble involved. Next, we have interest, that is pure interest. Pure interest means whatever money you are giving to any person, no matter you are giving your relative, your friend, or any one other person, but whatever money you are giving to the certain person, if you invested that money in a market, if you have deposited that money in the bank, you would be earning a certain rate of interest now. So whatever money you are letting other person to use, of yours money you are letting other person to use, on that whatever interest rate you charge, that is known as pure payment. Whatever payment you charge is known as pure interest. Okay, so this is the basics of your types of income and the 3 elements of the interest. Okay, now let's start with the question. In the form of question, we will discuss the further chapter. Also, do let me know in the comment section, and do count that how many answers you are giving correct, and let me know in the end of the session. Now, the initials of LM stands for, the initial 2 questions I have taken very simple to let you know what this particular curve stands for. So the question is asking the initials LM stands for what? So you have options here. So as we know, ISLM curve we have to study here. So first is saying liquidity model, liquidity preference and money supply equilibrium, liquidity and money model, and the liquidity and money. So what do you think, which of the following is the full form of LM? Let me know. So the right answer here will be liquidity preference and money supply equilibrium. Liquidity preference and money supply equilibrium is the full form of LM under the ISLM curve. So right answer will be B. Okay, do remember liquidity preference and money supply equilibrium. Now what does IS stands for? Now IS stands for, out of these four, which of the following correct? First is investment salary, second is investment source, third is your investment sample, and fourth is investment savings. So what do you think, which of the following is correct? So we have a ISLM curve. They relate to each other with a certain variable accordingly. Okay, and they will be intersect on a particular point where the demand and supply will be equal, the investment and savings will be equal. That situation is known as equilibrium. So the right answer here is investment and savings. IS stands for investment and savings. So ISLM curve is what? Investment, savings, liquidity preference and money supply model. Okay, this is the full curve we are talking about. Investment, savings, liquidity preference and money supply model. This is the ISLM. Okay, so right answer is D. Now, the variable that links the market for goods and services and the market for real money balances in the ISLM, okay, model is the dash. So whatever variable is there that links the market for goods and services, you have two types of market you can see. The first market for goods and services and the second market for real money balances in the ISLM model is the dash. So what is that variable that link these two types of models? So we have options here. First is talking about consumption function, second is saying interest rate, third is saying price level, fourth is saying nominal money supply. Out of these four, what do you think, which of the following is the variable that links the market for goods and services and the market for real money? So they will be linked with what? Obviously with the interest rate, because interest, the demand and supply of goods and services will depend on the money supply available with the public, and that money supply directly relates to the interest rates of the policies or loan or investments. So right answer will be your B option. Okay, what is right option? Right answer will be your B option. Next we have where ISLM, investment, savings and liquidity preference and money supply curve intersect at the point the money supply is equals to the money demanded and the savings are equal to 2. So the money supply equals to money demand when the ISLM curve intersect. Similarly, the savings will be equals to what? That's the question is asking about. So the options you have: interest, income, investment, rate of interest. What do you think, which of the following is correct? So right answer is very obvious, investment. Your savings will be equals to investment. That's how now, after that, when your savings is equals to investment, that's how the money supply and money demanded became equal. So right answer is investment, C option. Next, at higher rate of interest, the holder of money will invest in the bonds or hold cash in hand. So a very simple question is here. Let's say you are a holder of a money. It means you have a money. Let's say you have a certain amount of money. Now I am asking question to you, like you have a money. So what you will want to do in case there is a high bond prices, then you want to invest in the bond price or you want to hold the cash with you. Hold the cash means having the cash at your bank or at your home or whatever you want. So what will you do? You will invest your money in the bonds or you will invest your money in the bank or have a cash with you yourself. Which of the following decision you will take in case of the higher rate of interest is available? So what will you do? It will invest in bond, sorry, or hold the cash. So it's very obvious it will invest the money in the bond. It will invest the money in the bond because holding the cash in the hand will not give you the much return. So right answer will be the holder of money. The person who have money, that person will invest in the bonds in the country. Okay, so right answer will be your B option. Next, the bond price goes up. Your bond prices are up, then the interest rate comes dash. So when the bond prices, it means investment when you are doing in a certain market, the bonds are giving you a better return. So bonds prices are up. In that situation, your interest rate will be what? It will goes up, it will be not affected, it will be down or none of the above. So you can see bond is providing a better return. Bond prices are high. In that situation, you are getting a high return. So all the person will want to invest in the bond prices only. All the person will want to invest in the bond, and the bond will have a certain maturity, because bond is a debt instrument in which you are taking money from the public as a loan, and you have to return the money at a certain rate of interest with the, what we can call it, with the maturity date. You have to return that money with interest and the principal amount you have to give it. So your money will be blocked in the bonds if you invest more and more money in the market, in the bond system. Then what happened? The demand of the market will decreases. So that's why in that situation we have to decrease the interest rate. That will increase the money supply in the market, and it will increase the demand of goods and services. So in this situation, what have to be done, or what should be done? If the bond prices are up, the interest rate have to be slow, or interest rate have to be low, not slow but low. So right answer will be your C. The interest rate comes down when the bond prices goes up, and vice versa. If the bond prices goes down, then the interest rate will goes up. They have a vice versa relationship, like the demand and supply have with each other. Demand and supply have what? The demand and supply have a relation of inverse relation. If the demand increases, supply will decrease. If the demand decreases, supply will increase. Okay. Now next question, pure interest is dash. So I have just told you that whenever you are giving a loan to the public, whether you are giving loan to your relative, your friend, or any person, or whether a bank is providing loan to the customer, the certain things have to be observed. And those things is that, first, what risk is involved in the loan. Like if you are giving a loan to a customer, then you have to check the risk now. Like this is the customer, this is the credit history, everything you have to analyze the risk. So first is risk involved. Second is trouble involved. Providing loan, recovering loan, whatever trouble you face, that you have to cover. And the third one, you are making someone else to use your money. On that, you will charge a certain payment from the person, and that is known as what? Pure interest. So you can see there are 4 options. First option is saying payment for use of money. Second option is saying payment for risk involved in making loan. Third is saying payment for trouble involved in making loan, and none. So trouble involved is the one part, risk involved is the another part, and the third pure interest is the other part. So I have told you now there are 3 elements of interest according to which you will decide what rate of interest should be there. So 1, 2, 3 elements are there. So these cannot be the definition of pure interest. So the pure interest is simply the payment for use of money. So you allowed someone to use your money. So on behalf of that, a permission you have given to the person, you will charge a certain payment, and that payment is known as pure interest. Okay. So right answer will be A option. Now, if the short-run ISLM equilibrium occurs at a level of income above the natural rate of output, in the long run, the dash will dash in order to return output to the natural rate. So what we are saying, because of the short-run ISLM equilibrium happened, we have seen that the level of income above the natural rate of output. Natural rate of output means the supply, whatever supply you have. The level of income is above than the natural rate of supply or natural rate of output. It means demand is more than the supply, right? In simple language, we can understand that. In that situation, what happened? Prices will start increasing. People are demanding more goods. People will asking more goods, and the prices will increase. So to overcome this, what you have to do in the long run? What you have to do in the long run? First, you have to increase price level. The price level. In the long run, price level will increase the order, or second, in the long run, interest rate will decrease the return. In the long run, money supply will increase in order to return, or consumption. In the long run, consumption function will decrease in order to return. So simply, you have more demand and less supply. So what you have to do? The price level will help you in increase order to return output to the natural rate. If the prices are there, the price level will automatically make it happen that the supply will be equivalent to the demand. So it will have what? It will help you in order to return output to the natural rate. clear? So right answer will be your A option. Right answer is A option. Now, the analysis of short and long runs indicates that the dash assumption are most appropriate in. So when we analyze the short run and long run of ISLM curve, so it indicates that the assumption we are having, they are most appropriate in what? In your classical theory, in your Keynes theory, which of the following theory, classical or Keynes, your assumption will be most appropriate? First, in case of classical, assumption are most appropriate in both long and short term. No, it can't be possible in both long and short term. Your assumption cannot be correct. Okay, cannot be most appropriate. Now, we are saying next, the analysis of the short and long run indicates that the classical theory's assumption are the most appropriate in short run. No, classical theory talks about the long run. Hana, classical theory talks about the long run, like in the long run, country will grow. In the long run, national income will increase. In the long run, employment will increase, the growth will increase, the development will happen. That's the classical theories. Now, Keynes theory says that there is a growth in the short term only. In the long term, everything is going to be stable. In the long run, everything will be going to be stable. Only the short run will be there where there is a variable, so growth can be seen. So right answer will be D option. That is, assumption of the, analysis of the short and long run indicates that the Keynes theory assumption are most appropriate in short run, whereas the classical assumption are most appropriate in the long run. So do remember, classical assumption are for short run and Keynes assumptions are for the long run. Okay, now. The position of money demand curve depends upon. The position of money demand curves depends on what? So, as we have discussed the demand curve and supply curve, similarly money demand curve we have. So, question is asking the position of money demand curve will depend on what? National income, interest rate, both or none. So, I think that's a very simple question. If you haven't studied the chapter, still you will be able to answer this question. You are talking about money demand curve. So, national income definitely going to impact your money demand curve. Your interest rate definitely going to impact your demand curve. So, right answer will be both A and B. Right answer will be your both A and B. National income, or I can say the nominal income of the country, and your interest rate, they both are going to impact the position of the money demand curve. Okay, so right answer will be C option. Now, if the money supply is increased by government in economy, then interest rate dash. If government of India is increasing money supply in the economy, then the interest rate will be what? It will be goes down, it will be goes up, it will be not affected, or all of the above. So, government of India have done what? Increase the money supply. Hana, if the money supply is increased by government in the economy, then interest rate will be what? Interest rate will goes down. Hana, interest rate will be decreased because that will increase in the money supply of the economy. So, right answer will be A option. Okay, right answer is what? A option. Next, there is a name of an author who wrote a book, General Theory of Employment, Interest in Interest and Money. So, there is an author who wrote this book, General Theory of Employment, Interest and Money. So, you have to tell what is the name of the author. You have to tell what is the name of the author. First, Mr. Adam Smith. Second, Mr. Leonard Robbins. Third, Mr. J.M. Keynes. Fourth, none of the above. A, B, C or D. Which of the following is correct? So, we have also discussed these names in the first and second chapter of your module A. So, Mr. Adam Smith is known as father of microeconomics, father of economics, father of capitalism. And he gave the definition of economics on as a wealth. Mr. Robbins has given us the deficiency of economics as a scarcity. Mr. Alfred Marshall given the definition on welfare. Mr. Paul Samuelson given us the definition on what? On your growth. So, these are the four economists that have given us the better definitions of the economics that have to be remembered. Now, if I talk about Mr. J.M. Keynes, he is known as the father of macroeconomics and he also given us the definition of national income. The definition of a national income is what earlier used to be money value of all final goods and services produced within the geographical boundary of a country during a financial year. That's the definition of national income that was given by Mr. J.M. Keynes. So according to him, the GDP of the country used to be the national income, according to Mr. J.M. Keynes. But now this has been changed, that now the NNP of our country is actually the national income, and that's on the NNP factor cost. It used to be the GDP market price. So right now NNP factor cost is known as your national income. Do remember that. Okay, so the right answer will be your C option, and do remember national income is equals to NNP factor cost. How it is NNP factor cost, why GDP market price has been replaced, all this we will study in the national income chapter. Don't worry about it, Hana. But do remember that national income is equals to NNP factor cost. So right answer is C, Mr. J.M. Keynes. Okay, so this is how we have discussed about your chapter 15, theories of interest. But again, I am repeating, that's a very important chapter. Conceptual understanding, we haven't done anything in this session, Hana. We have a little bit conceptual understanding here. So do make sure whenever you study this chapter, make sure first you understand the concept in detail. Because apart from that, you won't be able to perform the numerical, you won't be able to perform the conceptual questions also, the relationship questions also between them. So to cover the whole syllabus, to cover the detailed conceptual understanding, you can go to the Mahapack 2.0, and right now a new Mahapack we have launched for all of you. So how to enroll? First of all, do download the application. Before that, do let me know how many answers you have given correct. So download the application, go to the JAIIB CIB section. Here you will find JAIIB CIB. Click on the JAIIB October 2023.